Welcome back to Everything Money. Today we're talking about Macys. The ticker symbol is M. Today's date is Tuesday, October 19th. For those of you interested in when we record this show, we will use our 8-pillar analysis to look at the financials of Macys. Paul, this is a really beat-up company. Malls in general, I mean, retail shopping. But it's Christmas season, Paul.
Christmas.
People are shopping early, so we want to see, is the stock price in line with their financials? Or, Paul, this might be a chance for a buy here. It's so dang low in comparison to former years. I get sad thinking about this. I reminisce about you and I going to the mall, Belden Village Mall in Canton, Ohio, and then the fact that maybe malls are going away or transitioning into online sales. I'm sad about that. But talk to us about Macys. I present to you Paul Gabriel.
Well, they have a good brand name, I think. They own Bloomingdale's.
Okay.
Look at the stock a year ago, $6.50, and now it's $26, right?
Come on.
Yeah, look at that. $27. All right. So guys, it's a retail play. You've got to, I mean, take it, I'm going to put very low multiples on everything. You got to take it with the concern of how big there's no small Macys store, correct?
Yeah.
They are big footprints. They're all huge. I'm immediately apprehensive about that. But again, a declining company sold cheap enough can still be a good investment. It's the cigar butts that Warren Buffett talked about back in the day. So it's an 8.5. It's an $8.5 billion company. 5-year PE of 175. Sick! That's an X. We want it to be less than 22.5. That's awkward. 5-year return on invested capital of 6.8%.
Uh-oh.
Okay, so we have two X's so far. We want this north of 9%. Not there. No dividend. 5-year average free cash flow, though, of $830 million. Okay, so far, two X's, which I kind of expected.
Revenue growth is pillar number 3, Paul, if you didn't know already.
I did know that. 26.24 down to 21.93. Oh, that's an X.
I got time for that.
Yeah, boy.
Profit?
Bad as well.
689 down to 517, but they lost 3.7 billion last year. So nice rebound, guys.
Oh my gosh.
Shares outstanding, 305 to 312. So guys, not only are they declining business and having a lot of headwinds, they're also issuing more shares. That's not good. Now, 10 years ago, they had 411 million shares.
I see.
Now they have 312. So it's declining over 10 years, but over the last 5 years, it's up. Okay. Now, guys, this next metric is about debt. What we did was we sat there and said, okay, let's take the 5-year average free cash flow. Let's multiply it by 5. So in this situation, it'd be $4.15 billion. We want their total long-term liabilities to be under this number. Now, one thing I want you to keep in mind, retail has a lot of leases, and a lot of times the capital leases are put as long-term liabilities. So don't be too scared. Go understand their long-term leases if this number is very high. So we go to the balance sheet. Scroll all the way to the bottom, $8.57 billion in long-term liabilities. So it's high. But of that, $3.1 billion is long-term capital lease obligations. That's something to consider because it is retail. Go understand in their 10K how many stores they have, how many they're opening, how many closing, and how the same store sales are going. That's extremely important for these companies. They have to redefine how they do shopping. Have to. Okay?
Pillar number 7 is free cash flow growth over the past 5 years.
So guys, one thing we do in our software that makes it very unique, we created the software because our users were like, hey, we don't want to wait for every video. How do we do our own analysis? So we created the software, spent hundreds of thousands of dollars, created this. And one of the things I did to make life easy, free cash flow is cash from operations less capital expenditures. I added this line right here. So that way the math is very easy for you. It just gives you the free cash flow number. 947 to 1.2, check mark there. Average of 832. Now guys, remember, not only you get everything you've seen here, we also have the 8 pillars tab that just gives you the quick recap. We also have daily content that comes to you exclusively. We have all of this in a mobile app, easily accessible on your phone. You can check everything out. You can talk to 6,000 other people who have the software. All this can be done. We created this specifically for the users. You get access to Mo, Seth, and I. It's absolutely perfect. Go ahead, Seth.
Yeah, if you feel alone out there in your investing process, maybe it's just you by yourself watching a video and you have to explain maybe you're investing to your spouse, we can help you. You can follow us, we can teach you, and we can use the software. Just data, no secrets, no secret group of secret picks that we make, no inside information. We're just selling a concise data and tools to get you the knowledge you need. And yeah, it's incredible, Paul. Tell us about pillar number 8, Paul. Go ahead.
So remember also the software is only 90 cents a day. That's super, I mean, it's a no-brainer, guys. It's the highest return you're going to get on your money. So for our last pillar, guys, what we do is we take the 5-year average free cash flow. We multiply it by 20. Why 20? It's a number we started with because 15 is kind of a good multiple for 1 year, but when you have a 5-year number, you want to take a higher multiple because hopefully the company is growing from there. So 832 million times 20 is $16.64 billion.
Yeah, so let's pump the brakes here because the actual market cap is $8.5 billion, but this is a declining company, Paul.
So
don't you think 20 is a smidge high there, brother?
Well, it's selling for 10 times right now, right? So we go to our 8 pillars tab here, and it'll tell us. It's selling for 10.10 times free cash flow. Now, the most important aspect of our software is the stock analyzer tool that you get. What we're going to do here is we're going to input assumptions about the company that will tell us exactly what we need to pay for the company. We'll take the revenue assumptions, profit assumptions, etc. going forward. This is the hard part. Why? Because we don't know the future. We don't know where Macys is going to be in 7 years. We don't know where retail is going to be in 7 years. How much has it changed in the last 7 years, right? Mm-hmm. So Mo, go through the trading. Mo will talk about his trading because it has nothing to do with the fundamentals. You can trade this thing no matter what. I will input the stock analyzer tool, and we'll see what the stock analyzer tool tells us to pay for this company.
If you want to join the elite tier of Bid and Ask traders, the Bid and Ask Nation, Mo is your fearless leader. Mo are people trading Macys over there. It's in the overbought. I can see it from here.
Yeah, so this is a daily chart. So we have a little bit more detail. We have the moving averages, we have the volume, etc. So right now you have, what I'm noticing is you had this big spike yesterday.
What was that, earnings? What is that?
You know what? I don't know what it was. Usually there should be an E here, so I don't think it was earnings. But when you get a massive influx of volume, and that big green line, that faint yellow line running through there, that's the average volume. When you get more than double average volume on a day, expect the next day to be a pullback. We're seeing it on Walgreens. I talked about it this morning on the morning show. Now let me pull up the other chart because I want to pull up a line.
Maybe the announcement was that Paul's going to host the Macy's Day Parade with what's his face and what's her face. Yes, I would think that's.
Who is it? Ryan Seacrest?
Yes, that Paul and Ryan Seacrest will be hosting Macy's Day Parade.
I do like Ryan Seacrest. So this is what we call a flagpole pattern. It's when the stock price moves just straight up and then there is no support created in here. So what I would rather see are these W formations. So each time the price pulls back, it creates a new support level. Runs up, pulls back, creates a new support level. You can see right here with Macys, this thing has shot straight up, created that flagpole, and there is no support in here anywhere for it to come back down, for it to stop. This could very well come back to this $22 range. We saw it over here. On earnings day, the stock price shot up and it pulled back halfway. You see this all the time. So this right here is alarming to me. Be careful with this. When you see big flagpole patterns like that where a stock price just jumps up in a couple day period, do not jump into it too quickly because it can burn you. If you like this kind of stuff, this is the type of trading that I teach in the Bid and Ask Nation. For $1.30 extra, you get all the software, everything that we already have, plus you get exclusive content from me, and you get to learn how to trade.
What about that stock analyzer tool, Paul? What should we be paying for Macys?
Okay, so
explain this to the folks.
So guys, what I'm doing here is I'm inputting my assumptions, low and high ones. My goal is to be conservative because we're value investors and we want to be conservative and find companies that are obviously selling for less than we want them, we think their intrinsic value is. So I put in negative 2% revenue growth for the next 7 years and a high of breaking even, the same number of revenue. Share change, increasing shares versus buying some back. Margin, 2 to 2.5%. Free cash flow margin, 3 to 4. Multiple PE and price of free cash flow. I went very low. Why? It's retail. It's going to be hard. 12.5% return. The stock is currently selling for 27 bucks. Hit the analyze button. It's almost at the highest of high. But yeah, I got to think to myself, it's somewhere in the 15 to 20 range and even then, I don't know. You have to understand Macys. Now, what I did here, Seth, I went to our main page. I scrolled to the bottom, I hit annual reports. So I want to look at the 10K. It takes us right to the 10K page. I want to look at how their number of stores, let's see, are there number of stores?
I like that jingle, Paul, whatever that is.
So what I want to do also is maybe open. So what I'm doing is I'm searching for, okay, right here. So right here, it's going to show me the number of store locations, 2020. Start count at beginning of fiscal year, stores open, stores closed, store count at end of fiscal year. They've closed a lot of stores. I like seeing that. This is retail. This is big time retail. They're closing stores up. They're sitting there saying, listen, let's consolidate and focus. Look at an example, Nordstrom.
I don't get it. Closing stores?
Yeah, because when retail's suffering, you don't want to keep more stores open. Go focus on the stores that are doing well, that get high traffic, that are growing, that they can sit there and concentrate on and drive profit.
Okay.
It might sound counterintuitive, but you want a nimble company that's able to handle these things. The mall operators, though, these are problems for them. Closing 50 stores at a time, that's a lot, right? Mm-hmm. Nordstrom, as an example, has like 250 stores total between Nordstrom and Nordstrom Rack, maybe 300. So this is big. They have a lot. Bloomingdale's, Macys, Bloomingdale's, and Blue. What the heck's Blue Mercury? I don't even know what Blue Mercury is.
No idea.
Do you know?
No.
Either way, guys, this is the 10K that you can get off our website, but it'll show you a lot of the data you need to find out about what are they opening, what are they closing, how are they doing things. I wonder, you can find their previous 10Ks from 2018, 17, 16, how many stores they have then. Retail's tough, guys. I'd be very, very cautious about Macys. Retail is a tough environment, especially big box stores like this. They're going to be very tough going forward.
That's our take on Macys. If these numbers resonate to you, join the community, and you can talk all about it and have the app on your phone. And yeah, we will welcome you in. Tough store, Paul. I don't know about Macys. It's tough.
Yeah, it's tough. I mean, there's going to be probably better opportunities elsewhere for other things.
Fondle thumbs up on the way out, like I always ask, and we'll see you next video.